Welcome everybody to the quarterly update call for the Kotak Pre-IPO Opportunities Fund for the quarter ended September 25. The format of the presentation or the webinar will remain the same. We will run you through, give you an update on the fund, followed by individual company updates. Whatever questions you have, please populate in the Q&A section at the bottom of your screen, and we'll try and take those questions at the end of the webinar. So, just to recap, this fund was raised in 2021 with a final close in January of 2022. We raised approximately 2,000 crores, and of that, close to 1,300 crores has been returned. 1,300 crores is the outstanding capital, and the balance capital has been returned back to investors. The value of the 1,300 crores of outstanding capital stands at about 1,500 crores as the current date. After recent divestments and distributions, our current cash balance stands at only 5 crores, and we've distributed 60 crores of capital and gains back to our investors. Our overall, on the unrealized portfolio, on gross MOIC is at about 1.18. Total TVPI stands at 1.1x. And distributed values are about 33% of their invested capital has been returned back to investors. As a summary, we've invested in about 15 companies through this fund, of which 8 companies remain to be exited fully and partially, both put, and balance has been exited out in the market post IPO. There'll be movements in the FMVs of 3 companies in our portfolio, starting with NSC. NSC, we marked it up to about 1,600 rupees per share. As of March, we had marked it at close to 1,400 rupees. We've increased that to 1,600 because of the secondary transactions that have been happening in the market, which have been in the 1,800 to 2,000 rupees range. We've still taken a conservative view and marked it at 1,600 rupees per share. 2 other portfolio companies, MPL and Pine Labs, have seen a downward movement. MPL, and we'll get into the reasons for that, but MPL has been reduced as a result of the real money gaming ban in India, and therefore we marked the valuation down to 0.64x. Pine Labs, we had earlier marked it at close to 1.6x basis the last round of valuation. However, the IPO was priced at lower, and now this 1.13x that you see here is a reflection of the current market price post listing.
And to say December, you'll be doing the fresh valuations.
Yeah, post December basis, the December financials, we'll be updating these marks for the other portfolio company, for all the portfolio companies, in fact, and that will be disclosed to investors in the March update. And this is a summary of the exited portfolio, which includes partial exits from Swiggy and SMT, and the others are all completely exited out. Overall, in the last 11 months or so, we have distributed about 250 crores of capital and gains back to our investors. And as we are in the harvesting period, we will continue to exit out from our current holdings as well, which includes the likes of Swiggy and Pine Labs, which are listed, and SMT, which is expected to be listed soon. So the next section is on the market trends. I will not spend too much time here. The PE activity in the market has remained as it was in the previous quarters, at roughly about $12 billion of investment activity spread across. A large portion of that capital has gone into growth and early stage investments, but buyouts, pipes, all of them have seen similar levels of activity as it was in the previous quarter. The next slide talks about the exit activity again. The strategic sale picked up in this quarter on account of one large transaction that happened in that, but otherwise, the others exit avenues, which is the IPO, open market, secondary, all have seen reasonable level of activity as similar to what they have been in the previous quarter. And we expect that the open market and exit activity to pick up as number of IPOs are have already come into the market, and as their lock-ins expire, more and more investors will exit out of the market. On the macro front, the overall global outlook has been revised upwards, and similarly for India as well. Our growth outlook for this year has been revised upwards to 6.8% from the earlier estimate of 6.5%. There is an expectation of that the trade deal with India will conclude soon enough, and therefore markets have also reacted similarly in the last few days. But we'll wait and see how that happens, and by when that happens, that will have a significant impact on the markets overall and the sentiment in the market as well. So we'll go into individual portfolio companies now. We'll start out with NSE. NSE in the first half of this year has seen a decline of 15%. We compared to the first half of last financial year, which was along expected lines because of the drop in volume seen on account of all the changes that SEBI had put into place. However, the Q2 numbers were a lot lesser as compared to even the Q1 number. There was a 9% Q-on-Q decline in this financial year, which was not along expected lines. So therefore, that is something that we need to keep an eye on. Market share-wise, NSE has lost market share further across both options as well as cash markets. Again, something we had expected that market share will stabilize around the 75% mark for the options. We'll wait and see where that trends over the next few quarters. From our overall this quarter, one of the significant event was that they have provided for close to 1,300 crores for a settlement application which has been filed with SEBI. They made a provision that's not an actual payment, and this again is part of the series of events that NSE has been doing to try and settle all old cases in an effort to get the approval for the IPO from SEBI. Expectation is that the IPO approval may happen sooner rather than later. And the company management has always indicated that as soon as the approval is there, they will be ready to go public. They'll be ready to file the DRHP within 6 months of that. So potentially we may see an IPO in CY26. All steps going in that direction. But a critical factor will be how the volumes and therefore the impact on revenues in this financial year, and therefore at what pricing the IPO actually happens. SMT, I don't have too much of update as far as the financials are concerned. Sajjanat Medical Technologies. The company had filed the DRHP. The company has received the approval from SEBI on the prospectus, and now the company is working with IPO bankers to try and put together the book, and the expectation is that between December to January, the IPO should come to the market. They're just trying to fill in the book as we speak. So event may happen in December or may spill over into January, depending on how the marketing efforts take place in the next few weeks.
And OFS?
So the IPO is largely an OFS where all the shareholders, which includes Morgan Stanley, Samara, and us, along with some liquidity for the promoters as well. They're all offering the shares in the IPO. There is no primary requirement for the company, and therefore we are very closely watching at what price the IPO or what price we can offer do the IPO at. PharmEasy, as everybody knows, is one of the largest platform in the health tech space. They've got 3 lines of businesses, which is sale of medicines through their online platform, direct B2C, sale of medicines to other retailers as well as hospitals. And the third line is through the diagnostic piece, which is being done through ThyroCare. In the last quarter, the company has done 2 events to bring down the overall leverage and bring down the overall cost of the leverage that they had. They had a very high cost debt that they're taken from during the time of ThyroCare acquisition. Part of that has been repaid, or that entire thing has been repaid out by taking low-cost debt through NCDs and other avenues in the last quarter. So now the overall cost of debt has come down. Further, the company had also done a block sale of ThyroCare shares, bringing down the overall holding from 70% to 60%. and that capital will be used to bring down further bring down their debt. Overall, the expectation is that the debt will stand at close to net debt will stand at close to 600 crores post this repayment from the Thyrocare sale as well. On the operations front, the company had a decent quarter as well. Growth resuming on the online platform. Profitability, the gross margin remains at similar levels, but they've managed to bring down costs and the operating leverage kicking in. They've now returned to profitability after nearly 12 months. They've come back to profitability. The idea is that they will remain profitable while growing from here on. The focus will be on PharmEasy, the distribution business, as well as Thyrocare. All three businesses will act as the growth engines going forward. And the management team is fairly confident of delivering a profitable growth from here on. From a management perspective, the erstwhile founders have stepped away from the day-to-day management, and professional management in the form of the CEO, CFO, all have been brought in. And they've been doing a reasonably good job in the last 6 to 9 months' time. Pine Labs, the company went IPO, went public in November, and the pricing of the IPO unfortunately was lower than our expectations, and therefore we have now brought our investment value marked it to at 1.13x, which was earlier 1.6x. We are closely watching the share price as we speak, and the Q2 results are expected in the next month, December month, and post that we will decide on how and when we look to exit out from Pine Labs. From a this performance perspective, the company continues on the growth trajectory. They've shown about 18% growth in the first quarter and improving profitability. They're 20% EBITDA margin. So from a 356 crores of EBITDA in FY25, they seem to be on track to deliver anywhere between 450 to 500 crores in FY26, which is nearly a 50% growth at the EBITDA level from between FY25 and 26. So operationally, financial performance-wise, they seem to be on track. We'll wait for the second quarter results to be declared and see the impact of that, and we'll take a call on when and how we look to exit from Pine Labs. I'll ask Nidhi to take over from here.
Good evening, everyone. Next, talking about Wordsay Innovation, which is largely Daily Hunt business. Daily Hunt, as we have been speaking in the last couple of quarters, had gone through, a couple of news cycles. Now they are out of it. They have strengthened the team with a new CFO and a CHRO. They have also got a FY25 audit done successfully by PwC and done within the requisite statutory time. And it's been a clean audit report which has been provided to the company and which has also addressed the prior issues which were about internal financial controls or any IT systems. With its, these issues in the past, now the management is geared to focus towards the business in terms of revenue growth, pivoting where it is needed. For example, in case of Daily Hunt and Value Leaf, both had a good amount of revenue coming from the real money gaming business. Given the ban on real money gaming, these two businesses got impacted, and as you can see, the revenue for H1 FY26 is lower than H1 FY25 revenue. Having said that, the company, despite a lower revenue, worked on reducing its burn. They are now burning about 12-13 crores a month, and the management has guided towards a break even by the end of the financial year. Exiting end of the financial year, and this is giving us a lot of comfort as the business has sufficient amount of cash for its growth perspective, and we expect the management to now work towards growing this revenue after all the financial issues have been sorted. The exit from this, as just to reiterate, our fund exit is 7th Jan 2027 from a maturity perspective, and hence we are now in the harvesting phase. This company we are looking at exiting in the coming calendar year, and either through a trade sale or a secondary sale of this company, provided we don't go for an extension of our fund. As the IPO for this company will take definitely longer, will go beyond our fund timeline. Next, we go to Licious. Licious has had a remarkable turnaround since FY24. You can see the numbers over here in terms of FY25, which grew at 18%. And even H1 FY26, you can see a good amount of growth over here. The company is definitely finding good feet with its offline expansion, and the online expansion continues to grow at around a 20-25% growth rate. The offline expansion is adding new users who were never buying online, and that is a very good sign as Licious is now finding newer markets to tap into. Our Bangalore and Mumbai customers probably would have seen the Licious stores also. They totally have now about 17 stores, 5 matured stores in Bangalore, which are already generating about 25 lakhs a month, and doing very, very well. So their plan is to go for an offline expansion. The company is or will rather raise a round in the coming calendar year, and during that primary raise, some of investors such as us will look for a secondary exit. So we will look for exiting from this company next year. The company has a healthy cash balance of roughly 400 crores and has reduced its burn as well considerably. Coming to Mobile Premier League, as you may all will be aware that August 2025 is when government announced a complete ban on real money gaming in the industry. And as a result, last quarter when I had addressed, the ban, in fact, had just come out 2 days before or 1 day before our quarterly update. The company luckily had a big part of its business, or a subsidiary in Europe called Game Duel, which was growing almost at a 50 to 60% year-on-year growth rate at a 15% EBITDA margin. This company, Game Duel, is now H1 FY26 has already generated about $33 million of revenue with almost a 15% EBITDA margin. So very healthy business. The company, net of all the redundancies made in the India business and cutting the OPEX in India, has now about $25 million of cash. Of course, with the India revenue becoming zero, the company has become EBITDA negative, but we expect them to bounce back to break even in the coming next 1 to 3 quarters. That is what the management has also guided us. Strategically, how the company will go from here, how the annual business plan will look like, what are the options in front of the company right now. These are the questions which the board is right now deliberating on, and we will then going forward decide what we need to do. Of course, we have to look at exiting this company in the next calendar year, and with the new business plans for this company, once the board is deliberated on, we can go out on a renewed efforts for doing a secondary sale in this company. Coming to Swiggy, this company, of course, is listed, and you may all be aware of the numbers. It's something which I don't have anything confidential. It is all in public domain. The company in this quarter had a good quarter in all the key segments. Food delivery, it continues to grow very well with a 19% year-on-year growth and expansion in the users as well as average order values. The take rate also saw a good amount of improvement. On the quick commerce side, it grew by almost 100% with a very positive surprise on the AOV, which is a key in this segment. So the company is doing very well. The company has also kind of slowed down its expansion of the dark stores mindful of the cash that they have at hand, with exit of their stake from Rapido and a QIP, which is for a raise of roughly 10,000 crore. They will have enough cash for further expansion. That QIP will be floated in the market by around December first to second week. And with that, the company will have a good amount of, almost 15,000 crores of cash, nearly equivalent to what Zomato has, and should be sufficient for the company to continue its growth path forward, despite the competitive pressures in this quick commerce business. Can you go to the next slide, please? We have been exiting this company, and with the recent exit, and of course, the money has been distributed to all of you. We have exited roughly about 56% of our shareholding in this company. 150 crores has been returned to the investors on a cost base of 112 crores. We have a certain price point in mind, and at that price point, we keep exiting. We obviously can't tell that price point because of compliance issues. So, but given this is a calendar year where we are anyway harvesting, we will continue to exit this company at a certain price point. Final company is TBO Tech. Now here we have fully exited, and we had made an investment of 50 crores in this company, and we have realized 81 crore. Can you go to the next slide, please? The company had an excellent quarter. They also acquired a business called Classic Vacations in US for $125 million as a combination of cash and debt. This gave them entry into the US market. The market perceived this news positively, and the price of the company went up. The share price of the company went up, and we used that opportunity to have a full exit from our business, and we have made 45% IRR on this company, realizing a MOIC of 1.61x. The proceeds of this capital have been returned to all the investors. That brings us to the end of the entire portfolio summary. Now we'll take the questions.
We'd request if anybody has any questions to just populate it in the Q&A bar at the bottom of the screen, and we'll take those questions.
So first question, Dheeraj, what is the expected IRR from our portfolio, and when do we expect a complete exit from this fund?
So second part, a complete exit from the fund. We are looking to complete the exit by December of 26. It will be a staggered exit from the listed companies or to be listed companies, which includes Swiggy, Pine Labs, and SMT, which we'll find liquidity first. And the next following with that is the other 4 companies, which is your Pine Labs, PharmEasy, Verse, MPL, and Licious will follow in the next calendar year. From an IRR perspective, the portfolio currently stands at about close to 4% IRR at this point of time. Endeavor would be to try and exit out these portfolios at or close to those marks. But it's a work in progress as we speak.
There's a question on NSE, Dheeraj. Are we expecting liquidity in NSE anytime soon? And given the numbers have been bad, how do we expect the IPO to be priced? Generally, it has been below estimated valuations.
Yeah. So as far as the performance of the company, frankly, it is we were expecting degrowth in this financial year anyways as compared to the previous year. Our internal estimate was that it will be anywhere between overall about 10 to 15% year-on-year degrowth on both top line as well as the bottom line. The Q2 numbers was slightly lower than what we had expected on a sequential basis. And therefore that came as a bit of a surprise, but overall we are anyways anticipated. As far as the valuations are concerned, there is a listed company in the form of BSE already there. The benchmarks are already available at the market. Unless the market itself turns, we expect that NSE should list at or very close to those valuations of BSE. It's just a question of when that IPO happens. Now, whether we are looking for an early liquidity, if an IPO is imminent in the next calendar year, we would like to wait out till the IPO or very close to the IPO date rather than today. And if that is not happening in the next calendar year, then we will look at a secondary sale in the next calendar year. It's a fairly liquid counter at this point of time, and we'll consummate the transaction in the next calendar year. But at this point, we're not looking for early liquidity at the current pricing.
There's a question on Daily Hunt, which I'll take. Are we looking for an exit in this year? And what is in the coming year? And what is the expected price of sale? Are we expecting a loss over here? So we'll be candid. The company has gone through its challenges, and that has led to a decline in revenue, which most likely will lead to a decline in valuations as well. When we have to exit, most likely we will be taking a haircut. Right now, we're not able to comment on what that price will be. It will have to be a price discovery process. We are talking to certain, buyers, and we will get to know, and we'll keep you posted about it. Dheeraj, there's a question on SMT. Are we exiting at IPO or post-IPO?
So, as I mentioned earlier, the SMT is an OFS. The IPO itself is an OFS in which we are also participating. We hold close to 6% of the company, and we are roughly offering about 1/3 of our holding in the OFS. The size of the OFS, etc., may undergo some changes, but as it stands, we're roughly talking about close to 2% of our 2% shares we've offered in the OFS, and the balance we will exit out post listing. As we are a Cat 2 AIF, we do not have a lock-in. Therefore, we can try and exit out in the market once the IPO happens.
PharmEasy financials, do they include Thyrocare?
Yes, it's a consolidated financials, includes the financials of Thyrocare as well. Yeah.
I mean, there's a question on our IRR and what went wrong with the strategy. Not even one of our company has outperformed. I actually beg to differ over there. If we go, can you just go to the slide over there? We have, on a overall basis, we have performed. For example, TBO Tech, we did make 45% IRR. Policy Bazaar, we have made 1.53x with a very healthy IRR. Tata Tech, Cyan, DLM, SBFC. Look, we started in 2021 when we invested. The valuations were extremely high, and investing at those valuations have hit us when our 50% of our portfolio was deployed between 21 and Feb 2022. We kind of took a pause and we realized that at these valuations, it just doesn't make sense. We did not invest for 1 year, and we could afford to do that because we did not charge management fee on committed capital. It was only on drawn down capital. After that, all the investments that we have done, for example, Cyan, DLM, Tata Technologies, NSE, SBFC, TBO Tech, Aadhaar, we have made money. Now, we course corrected to do investments in profitable companies. We course corrected to do investments where there was valuation was also saner so that we could make good amount of money. Unfortunately, a lot of these companies, the allocation that we got was very, very small, and hence it did not move the IRR much. NSE, of course, we put 200 crore, and that is tracking at our current marks of 2.6. But we expect it to be much higher, when the IPO goes through, or even, in the coming year, because it is anyway compounding at a 15% rate. So this strategy, yes, we agree, has been a prisoner of high valuations when we started deploying. We have tried to course correct. We have tried to learn from this, and I think while we avoided a lot of issues, for example, corporate governance issues like many of the companies had and many of our peer funds had, we were able to avoid those, but we could not avoid some of these issues which happened. Like, for example, let me take, for example, PharmEasy. PharmEasy, when we had invested, it was about to go for an IPO. The money was actually taken, the debt money was taken to buy Thyrocare, and the company was about to go for an IPO, and the IPO got called off, around when the Ukraine-Russia war happened. Pine Labs had filed for an IPO in NASDAQ, and they had to withdraw it because of the market circumstances. This is all happening in 21-22 when the valuations were high. We could have got a very healthy exit. You have also invested with us that time. We were, all investing together in that valuation. When we realized that valuations are too high, we will not invest. In fact, and some of you may recollect that we also returned capital when we saw the valuation started rising again, and potential portfolio companies where we had committed capital after taking IC approval, they would come back to us and they asked us for more or higher valuation, and we said, we have done this mistake once, we will not do it again. We'd rather return the capital to our investors, and that's how we corrected this. We agree and we understand that the portfolio has not performed to our liking and to our expectations. We are trying to manage the portfolio as well as we can, time the portfolio, time our exits, so that our investors see good returns coming out of it. We're trying our level best. There are some questions with regards to standalone financials of Amidi. Certain investors are asking. Those things we can send directly to the through the RM. Those things we can send. There are some questions with regards to amount distributed per lakh. Those also we can send via RM. We don't have those questions handy in terms of
Answers.
Profit plus capital. So those are very specific questions which we can send to the investors. Swiggy, there are questions on Swiggy. We could have exited fully at the time of listing. Swiggy, in fact, we did exit at 600 rupees price point. Whatever we could exit, we had a large order. The volumes were not so much. Whatever we could exit, we exited. In fact, some of the investors had reached out to us that hold on to Swiggy, do not sell. But we still decided that at 600 rupees price point, we should exit, and we took 12% of our capital out over there. So we have been doing a lot what we can to give a higher return to our investors. Unfortunately, Swiggy went through that cycle. Market also has been sideways for the longest time. Some companies, like Pine Labs and SMT, etc., where you see that now there are pressures on the valuation. The company had a IPO price of 221, and after that it has risen to 246 rupees. So there are pressures when the IPOs are getting priced right now, and that is kind of impacting our exit. But that's why we are not in a hurry. We are exiting when we think we can time it right for our investors and give them the best possible returns. We are fundamentally taking a call on the companies, and you want to see whether the price is right or not.
I think that's all the questions that we have right now. If any investors has any question, please write to us and we'll try and address them via email, or we can get on a call separately. Thank you so much for joining this call today. And we will, as always, we'll come back to you in the next quarter as well and give you an update on where the exits stand for the rest of the portfolio as well going forward.